everyone, and welcome to another Ben and Cata webinar on Thursday afternoon or morning for Cata. Good morning, Cata.
Yeah, good morning, and hello everyone. Welcome back.
I can see you're dressed for the occasion.
Huh?
I can see that you're dressed for the occasion. You've got
Of
your
course.
Altrady
Yeah,
cap.
I got my Altrady shirt,
Yeah.
Of course. What do you think? And my hat. And this we have them when we went to Dubai, I think. That's when or before that or after. I don't even remember. However, I think we have to order new ones, like some shirts and so on.
Yeah. Well, we have merchandise, so if people are interested in getting Altrady stuff, we do have it. It should be on the YouTube channel somewhere. Not sure where, but
No, I don't know.
I've added it there. Yeah. You can download. You can get your Altrady merch on YouTube on our channel. But yeah, that's we're already moving away from the topic. We're not even 2 minutes in, and we're already talking about other things apart from what we're going to be talking about today. So, what are we going to be talking about today, Cata?
We're gonna talk about breakouts, and I know that it's a strategy that you really like and something that you're using a lot, and you have been using a lot. And I know that you prepared and you have some cool stuff for us today that you're gonna show to the people what you have.
I thought that this was going to be another smart trading video.
Yeah.
Did I prepare the wrong thing?
Yeah, we can switch. I think
No, just kidding.
Yeah.
Breakout trading. Yeah. Well, yeah. I've been trying that in several ways actually. But yeah, we can go into that. What the different ways are, of course.
That's great. However, we might before starting, we might say something about and announce our trading summit.
Yeah, go ahead.
So, guys, we have some really cool stuff happening in the background, and right now we are really happy and excited that we are able to share that with you. We will organize together with the Better Traders, with Aaron, a summit, a trading summit, which will be held on site in Toronto on 15th of May. So in Canada, we're gonna be on the 15th of May. It's in the same period with Consensus that will gonna be the conference, and we're gonna attend as well. However, if you really want to, learn more bot trading strategy, learn from Ben directly, from Aaron, and so on, you might check the page. I think I'm gonna share it on our YouTube, the landing page that we have for it, and where you can get all the details. However, it's a great trading course that we're gonna hold together with Aaron, and by all means,
So the trading summit is a course.
Yeah.
And what will the course be about?
Well, we have a lot of that. So basically, we're gonna talk about psychology of trading. We're gonna talk about bot trading and automation. We're gonna talk about risk management. We're gonna talk about semi-automation trading, and of course, we're gonna get any other Q&A from the public, and we're gonna have examples, and we're gonna show you how you're gonna set that up. And that will be awesome. So for anyone that is even a beginner, mid-year, even advanced, you can join that course that we're gonna held on Toronto. So don't forget, it's May 15 in Toronto. I'm gonna drop the link in the chat so everybody can have access to it and get all the information. And if you have any other questions later on, just let us know, and we will try to do our best and answer any of them. So yeah, that's it.
Yeah, that sounds. I mean, it's an amazing course. I think if you want to expand your horizon a little bit, and Aaron is such a good teacher as well. So that's gonna be a great thing. And obviously, I'm gonna be there as well, hosting one of the sections in the course. So if you like my style of explaining, then it's gonna be good.
Now nobody gonna join.
I see the number of viewers drop immediately. What happened?
Exactly.
Oh God. All right. So today was going to be breakout trading.
Yeah.
Yeah. So let's grab a chart. Let me grab it. I think we're all here, and we can all see the chart. Yeah. So this is the chart. And do you know what types of breakout trading there are? Like, or how new are you to breakout trading? What do you consider breakout trading? I mean,
I'm really new.
you're really new. Okay.
I'm like beginner new. Let's put it like that.
Such a greenie. Okay, so breakout trading. If you've been following our webinars previously, then we are always talking about trends, right? Uptrends, downtrends, sideways trends, channels, ranges, all those things. And effectively, what that means is that there's prices. Oh, and we even had patterns, chart patterns, right?
Yeah.
And what it means is that we expect the price to either stay in range, stay on trend, stay in the same patterns, things like that. But obviously, at some point, that trend is no longer valid. The pattern is no longer valid. And that's when you speak of a breakout of the pattern trend, the uptrend, downtrend breakout. So as long as it's no longer validating the same way it was trading before, that's when we call it a breakout. And that could mean that, so let me just draw some things on the chart. So we can have, for example, what we see here is that we have a nice range. We can see a range here. Price went in, did bounce back to support and resistance up here. Like if I draw another range here, you could see it like that. So this was a range. This then was a drop down into the range. So this right here is a breakout. It's a breakout of this range. It does not continue to follow it. As you can see, the price then tried to recover back to the range, but it couldn't. And then it formed a new range. And the new range started to form roughly around here. So like you can't say that this is a range. You can say that this may be a start of a range. And this is where you see the range really working out. But then again, it starts to break out. So that's one, the ranges. These are basically support and resistance lines, right? But they are double support and resistance lines. So you could have another thing where it could hit, and that is just support and resistance. So for example, here we could see a first level of support. So there's a lot of liquidity here. So usually price can bounce off. And if you actually grab it from all the way over here, then we could say that this was a support line. And then it broke through that support line. It did not bounce off this one and continue to go back up. So this is again support and resistance, and this is then the breakout. Right? So that's for support and resistance. And you could do the same thing with the resistance line. So right here, this is not a range per se, but there is resistance here. And you can see that the price continued to move back down, not to a horizontal line. So it's not a range like that, but it will be, it is still support and resistance. And this is then the breakout, moving into another range. And you can have this as well on the diagonals, right? So that's when we're talking about support and resistance on trend lines. So here, it's not a clear, it's not a horizontal support and resistance, but it is a diagonal support and resistance. And this is where you can call this compression, consolidation. Anyway, the price stays within these levels, right? And as we've seen from the webinar where we did the chart patterns, then this is a clear. I always forget the names. Like it comes in down, And then you have the ascending triangle, the bull flag bear. No, it is a bear flag actually, or this bearish structure. So this one is a downward trading pattern. And the way to trade this is to check for the breakout. So this could be a breakout to the bottom, then it's a continuation, or it could have been like if we ignore this happening, then we could say that this is a reversal pattern. Right? So the price came in here and it goes in there. And it's still a breakout. So it's a breakout of this support. Or in this case, a resistance line. So it broke through this resistance line and then continued to go up. Now, that is effectively the support and resistance trend line and the pattern-based trading. So we have the flags. You could have other types of patterns, like we saw them, the cup and handle, the bear flag, bull flag. We know the Quasimodo from the smart money concept trading. The ranges, all that stuff is where you can do breakout trading. Now, the question that we always get when we explain certain technical topics is, how do you trade this, right? Because you want to be able to trade, and be profitable. So the way for that is then to look at entry points on the breakout. So once you have identified a structure, then if you have a strategy that works for you, because this is not a clear, like anything that I'm showing here is just a surface level, entry level strategy, right? But the most important part is, how do you get comfortable with the strategy and how do you execute it to perfection? And that's, I can show you how you would teach yourself those things. And that's exactly what we're going to be looking at today. So don't ask me any question like, oh, how do you effectively trade any type of bear flag pattern trading with golden entries and all that kind of stuff? That's up to you. I don't trade like that. I know how people do it, but the ins and outs, not familiar with it. But that's not really important for why we are showing you this, because this is like, if you trade like that, this is going to be how you can improve your strategy. That's the most important thing that I want to say. Okay, so how do you do that? Well, I've looked earlier today and I saw a nice opportunity right here. And this is somewhat like okay, so I've found it, but you can trade it like the strategy. This is a strategy that would normally work in a percentage of the time, and if you apply proper risk management, then you should be able to have a successful strategy built on top of this. Now, what your parameters are and what your exact entries will be is something that you'd have to backtest yourself and keep a journal to make sure that you understand the best entries and exits for you, for your specific trading style. But this is an example of how you could do it. So let's go back here in time. And what we can see here is actually that we see a large cup forming in this case. And this will be a cup and handle pattern. At least that's my expectation. So if I look at the chart right here, then I'm expecting the price to do something like this. Right? That's the classical cup and handle pattern. And from what we've learned from the chart patterns, then the expectation is that you have this pattern. If it breaks out, then there can sometimes be a small retest, and then the price should generally continue. Right? So that's the goal here. So how would you normally do this? When you get here, you can see that the price is not there yet. But if this pattern is trying to confirm, then we want to get notified by that. So what we can do is we could set like a price alert right here. Right. So now when the price is touching this point, then we can start to look for entries. So here we've moved ahead in time. So I've walked away from my computer, I've done something else, or I've looked at other charts or whatever. I've not been staring at this chart. Now I get my notification. And now you can see that that cup and handle pattern is definitely there. Right? So there could be a possible entry right here. But they're like a lot of traders, they might get in immediately, right? Not thinking straight, just blind and just YOLOing. But you have to do a little bit more analysis right here. You can't just enter blindly, because the big pitfall of this style of breakout trading is that you go in too early and then it's actually a false breakout, right? So that's not something that we want. So similar to trading the smart money concept, we have to wait for a certain type of confirmation, right? Confirmation can be, there are different things with confirmation that you could use volume as a good indicator. So if you see a lot of like this move right here, even if you even have a little small cup and handle right here, and you could see that there's volume stepping in. So the volume here was relatively low, but this is the first big volume. So this breakout was on higher volume, right? It increased the volume by 2 times roughly. And that is a great confirmation, great indicator that the price will actually go up, increasing your success rate of the strategy. Does that make sense?
Yeah.
By the way, for the viewers, if you have any questions, let us know. I see someone getting a playback error. I'm not really sure what that's related to. If it's related to the app playback error, then please contact support. If it's related to YouTube, I have no idea.
Please contact YouTube.
Yeah, please contact YouTube support. Yeah.
Okay, let's go back.
Okay, so next, let's remove these drawings. Okay, so now that we have determined that this may be a good entry, because what we can see here is that we can see confirmation that the volume is indeed increasing. Do you see the difference, Cata?
Yep.
You can see like normally the candles are around here, and now you can see this big candle. So the price has broken through, and it actually, either closed on top or closed in it. Not really sure, but we can actually look now for a 15-minute time frame, and on the 15-minute time frame, there we could see like it closed above the.
It's visible. Yeah.
Yeah. It closed above the cup and handle highs. Right, so here it almost touched it, but didn't go. So this could have been that fake out, and the fake out could be spotted as well because there's no volume. You see, there's no volume spike pushing the price through. That volume spike comes here. Right, so now we can then start to place our entries. So we could set up our limit order. And we could determine our stop loss, right? So we can set our stop loss to the low point. So in this specific strategy, then the low point or the stop loss would be below the low point of the handle. So not the low point of the cup, because then you would go very, very far, but the low cup of the low point of the handle. And you just set that below there. Now for the take profit levels, we actually have to zoom out a bit, because this is too narrow. If we put any take profit right here, that would be a silly trade. No one would take that trade, right? But there are nice support and resistance levels right here. If we draw them there like that, right? And these are other points of interest. These are other pools of liquidity where the price is likely to either reverse or at least get drawn to, right? If this is a very big topic in the smart money concept. Obviously, this entry is not based on smart money concept, but it's true. Like, you can always see this price moving towards these higher highs, higher lows, or lower highs, and then the lower lows. Like, the price always tends to be drawn to the liquidity pools that lie below or above it. So that's the same in this case. So what we could do then is put our take profit on that level. Now, I tend to be a little bit conservative and place it below this point. You don't have to necessarily, but that's something that you would have to backtest. But usually when I see support and resistance levels, I tend to put take profits just below that. Just like my stop loss would be below a little bit below the lowest point, not on the lowest point. Maybe it's superstition. I don't know. Then we can move our second take profit to the next level. And if we're in this case working with 3 take profits, then we can do that. And we could set that up like that. Now, and to sweeten the deal, we can even make it trading. Right? So would this be a decent setup? Well, we'd have to check. How, from the previous episodes, Cata, do you remember what is a key indicator of a good trade setup or a bad trade setup? Okay, if you don't remember, because I'm kind of putting you on the spot here. We didn't rehearse this, obviously.
No. The only thing that I'm thinking right now, looking at this chart, is the time period, because I see the higher highs and higher lows and our lines where we put our take profit. However, we have to take in consideration that we are talking from February till August. So the only thing that I'm like really thinking is like how long this trade will gonna take.
So length, definitely a key factor. Like, are we likely to hit this level anytime soon? Well, we're trading on the 1 hour chart. A move like this would be, I don't know, 14 days. Relatively long position, right? But it's okay.
Which is not a problem. It's just more like the expectation, because people in general, they want to see things like fast happening.
But I mean, if I want to get 17% profit on a spot trade, because this is a spot trade, right? This is not a futures trade.
Look, 17%, it's amazing. I mean, in
18% in a day, 45 and 28 or 21, 100% there. Like, come on, this is a huge trade setup if it works. But the clear thing to look at, the biggest thing to look at is of course the risk. Is the risk reward ratio good enough? Because if you have a strategy and you've perfected the strategy, or you're trying to perfect your strategy, then looking at the risk reward ratio is super, super important. We need to make sure that we don't overexpose ourselves, right? And that we run too much risk, and that we can, like, the reason why you want to reduce your risk, is so that you can repeat the same strategy multiple times and be wrong multiple times. And if you're right once, then that mitigates all the times that you were wrong. So that's why you want to look at that risk reward ratio. So that even with a mildly successful strategy, you could still be profitable in the long run. Okay, so this risk reward ratio is really, really good. And this was a period where everything was going up, very bullish. So is this a like an unlikely scenario? No, not really.
No,
not really. Okay, so we can place the order. And then, so we had the confirmation and we got filled. And then we can switch back to the 15-minute. And we can actually grab the chart with there. And as you can see now, the take profit orders have been automatically set for you. So with the breakout trading, you tend to get in immediately. So, but still, these things were automatically placed and spaced out properly. And then we can continue to see what happens. So, as expected, the price continued to move away from this cup and handle. Like that was the expectation. Now, in hindsight, everything's easy, and I found this thing when I know what exactly happened. So, for all the haters here, backtesting and trading like this is easy. In hindsight, everything's easy, and you just picked a great spot. All true, right? But the thing that's also true is that you can follow this strategy, and you could see that it works. And if you apply this strategy where it doesn't work, that's also fine. Then at least you know and you test whether or not that this strategy is going to work for you, right? That's all that matters about backtesting and educating yourself to become that better trader. And as you see,
Voila.
our first take profit was reached. And the nice thing now is that our break-even price is now lower, and it's actually already below our stop loss. So we don't need to move our stop loss. We can just leave it in. Even if the price continues to go down, doesn't really matter. We would be out in profit. Granted, a smaller profit, but not something that we could not live with. And how long did this take? 4 days to get 19%. I mean, that's not bad.
Not bad at all.
And that's on a spot exchange, right? On a spot exchange. So let's then continue, because you can let your profits ride. And that's why we actually already set up multiple take profit levels. And during these periods, it's really good to be away from your screen, because if you see this happening, then this is where your emotions kick in, and you're like, okay, I just had that massive profit of 18%, 19%, and I'm now down to 9%. What a waste, right? It goes almost back to my entry price. But it's a profit. It's a position that you took. And yeah, you could exit there. There'd be no shame in it. You could say, you know what, I've had enough. If there's a reason to exit based on a strategy, then you can exit that on the strategy. Like, obviously, we didn't know which candles were coming here. We didn't know that when we placed this trade. We knew that the price was drawn to this level and clearly hit that. But what we didn't know was, like, maybe there's another breakout, because we can see the trend line going here, and it broke it, and then it continued to go down. Like, it even touched the trend line multiple times. And the same for here. It formed another trend line down here, and there was another breakout right here, which you could have entered right here, and you could have be on this wave up, and then had to take profit right here again. So you can do this multiple times if you want, using different types of breakout strategies. Here's another breakout. So we hit this support and resistance line that we already had our take profit set to, and now it broke out. We can see a huge amount of volume, confirming that the price is likely to go up. In this case, you might have been stopped out, although you need to wait for a confirmation point. So maybe you would not even be in this trade yet, because there was no clear bounce off this support line. It just went through and went back through it again. So this nullifies that move. But then if you're trendline trading, there's another entry. You could enter here, probably be stopped out. There's another trend line here, another breakout. You could have sold something there and bought it back at the bottom here. Like these are still relatively high percentages for a very short amount of time. So you can trade this in a very very aggressively if you want to. And there's breakouts happening everywhere. It's not just this cup and handle pattern breakout. There are so many breakouts happening in all different kinds of patterns. So if you start to work on those patterns, and people will say, oh, patterns don't work. Well, why are they in the chart then? Like, okay, yeah, they're in hindsight. But if you spot them, and in hindsight, the cup and handle pattern works 50 or 60% of the time. Maybe it's lower. But if you put your risk reward ratio in order, then those are decent amounts, right? Here again, nice trend line, nice breakout. Another cup and handle pattern and another move. There are so many breakout trades. Like there's a trend line. Let's see, trend line there. Like, and I'm even drawing these in the replay at high speed. But obviously you'd have way more time to do this. Because every candle that you see is 15 minutes. So there's plenty of time to find these setups. Here you can see a nice what's this called again? That's the head and shoulders, the inverse head and shoulders. Yeah, you can see two cups, or you can see two handles, two shoulders on each side. Goes back up, goes in, and then continues. What else do we see? We see a bear flag right here, continuing to the downside. And we see up here, we can see this. And we have a nice flag right here. And again, the breakout moving towards a profit target right here, because this is a profit target for the flag pattern. And in the meantime, our take profit was reached. Right, so we move towards another support and resistance line, and in that move upwards, you see a lot of breakouts happening on sub patterns. Now, this was obviously patterns on a 15-minute chart. So for people asking, is it possible to trade this on the lower time frames? Absolutely. Absolutely. Is there profit to be made? Yeah, but they're smaller, like 3%, but it only takes you several hours. Right? Instead of this one where we're now in the trade for significantly longer. This one would be, we still need to update the position info to show you exactly how long this position took, but 22 days, 46% profit. I'll take that to the bank anyway, any day. And let's continue because we're not done yet. We see another breakout of another support and resistance level. Even more price action. So the price struggles, right? So you see this false breakout. And again, so how do you know that this one was not a good entry? Well, because there was no bounce, another bounce off this support line. So now we get a bounce. There we get the bounce. And now we get towards our next take profit level. And as we put it to trailing, we can see how the price would move up. So I'm just going to put it to autoplay where it would continue. And we can see that the price is continuing to move up. And now, like we would have sold here, but with the trailing take profit that we have, we're now getting stopped out here. And how much did we add extra on top of this last target? Another 10%. So in total, if we go back to the 4-hour chart, in total, our trade lasted for 24 days. And now the time is updated, actually. And we can see that the net profit would be 55% based on this breakout trading strategy. I mean, that's huge. And I understand you picked this place, you picked a good entry, you found it, and it's super easy. But it's in here. I didn't create the candles, right? So the pattern presented it, and it's tradable like that. You follow the strategy and you get in. You see it here as well. Another nice breakout right here, a different strategy, different pattern to follow, right? For people that like crypto lifer, Sam Price, like he trades like this, take profit right there. No, bam, no problem. This could have been it. If you trade like Tory trades with Trendlines, no problem. All breakout trading. You can trade it like this and use Altrady to maximize your profits. Also, well, like I didn't change this position anymore. This position did take 24 days, but I didn't have to touch it or anything. The system traded this position as I had previously configured it. So it followed my strategy, basically giving me the opportunity to eliminate any type of emotion, which is again another pitfall of any type of trading, not just this breakout trading, but any type of trading that you do with emotions is risky. But setting up your trade like this in advance is a great way to execute your position with zero emotions, based on your strategy that you have backtested like this. So this backtesting tool that this is still in active development, but it's, as you can see, it's such a great way to test your strategies in the market and have it play out with a real like scenario, in the sense that you do trade with multiple take profits. You do trade with stop losses that move to profitable positions, even if your first take profit is not reached. You do maybe exit a position once you get cold feet or you get uncomfortable with the current setup. You do exit, you do those things. And with this backtesting tool, that's going to be possible for you to do and track. And when we're ready with this, you will see you can start this whole backtest session and do all these types of breakout trades, and log how many times you were wrong, how many times you were right, and see what you could have done differently to improve your strategy, to improve your success rate, and ultimately to improve your profits. So with this new feature that's coming very soon, that all becomes possible. And I'm super excited about it. I'm so excited about it that I'm willing to risk making a fool out of myself for displaying a feature that is unfinished, like I did on Tuesday. If you were at the webinar on Tuesday, there was some kind of bug that prevented me from showing you this. But I'm so excited about this. This is going to help me learn the new strategy for the smart trading concept, but this also allows you to test your strategies and become that better trader. What do you think, Cata? Because you've been very quiet, and I can see you smiling on the camera.
I am, because I realize the potential of this feature in the way people can learn and test any strategy, regardless of, it doesn't matter if it's crypto, if it's traditional finance, doesn't matter. As long as you have a chart and you have a strategy in mind, you are going to be able to have a very easy way to actually test your knowledge and put that in practice. And that's really a game changer. I mean, what else we can do more? I mean, seriously, I think we are doing a really great job, to be honest. And by all means, it's something that I know that you and Roman worked a lot to have this in place, and because it makes sense.
Don't forget Areg, our front-end developer.
And Areg, yeah, true, as well, and Areg and so on. So I know it was a lot of work put in this new feature that we gonna launch soon. There will be more things coming. However, we're gonna talk at the right moment. Still, this type of reply function will give a true chance and a true possibility to anyone that wants to test their skills to do so. And they will gonna see how that's gonna play with. And as Ben mentioned before, you can try it a few times, back test it, and then you can really try to see how that works in real life, with real money. So yeah,
Yeah,
I'm
obviously,
excited.
like,
I'm really excited about
obviously
what
this is easy,
we
right?
achieved.
Yeah, because this is easy, right? I'll say
Yeah.
it again. This is like everything in hindsight. But if you don't want to, like, if you don't really want to know exactly what happened, like if you just want to get to a point in time, you could just select the random bar, and this will throw you for sure. And I know that this will throw you for sure is because even when you do a backtest several times in the same market, you will see different things. Like you will interpret the candle different every single time, right? But it's not about making sure that you get 100% exactly the same execution in the chart. That's impossible. Like we're not like, for that you need a proper algorithm that executes it to perfection. But yeah, that's almost impossible to get. So even if you do the backtest several times, you will get different outcomes. You might not get the same thing unless you've like just yeah. Let me just, I wanted to go back here so we can just go back here, because there's another thing that came up, and that is like here we could see. So this would be the Tory trade style, right? So you already recognize it, right?
Yeah.
You see me drawing these nice little rays of sunshine like that. And this is something that I haven't tried yet, but I saw this pattern forming. So the way that Tori gets in is to look for this. So she could consider entering here at a short. Now this is not so you could do that, which could be good. And then the strategy would be to follow it like this. So as long as it stays below this line, then we're in the short and we're happy, and we would exit as soon as it crosses that line, which would be now. And then we would move this one down here, and we can continue to the next one. And this could consider another short, but then we'd have to be here. And then, okay, so now this would be actually a reversal, and you would actually maybe go long in this case. So then we continue. So you would have entered here. Actually, we can do that. Actually, I can enter now. Doesn't really matter.
Yeah, that would be better.
So what she does with her strategy is that the stop loss would be below the trend line. So here, if it dropped here, then the stop loss would be somewhere around here. That's her strategy. You could say if it goes below this support and resistance line, then we get out there. So we get in with a take profits can be here, and another take profit can be here. So obviously she the strategy where what she does is that she looks for the long-term trends, and technically you wouldn't get out of the trade if it crosses until it crosses this trend line. However, if you look at the level of increasing, or the increasing level of this trend line is not very steep. So if you want to make large percentage profit, then this would have to ride it very, very long, which is unlikely because it doesn't happen that way. However, what can happen is that you can get steeper lines at some point. So at some point, this price is going to go back down and move up, back up, and then you can form another trend line. But we'll see how that works. But what she also does is she looks for support and resistance lines for her first take profit levels. So in this case, that and 2.8, a decent entry. So then when you place it, now you've got the take profits activated, entry with market, and we can continue. So let's see. So yeah, here now we have this trade in play, and what she can do is then draw this trend line now, and she makes it nice green color. I don't have these colors available here, so let's just do green like that. So now you could exit. So what I said before with the cup and handle pattern, you leave your stop loss in the place where it is, But with this trend line trading style, you can actually move your stop loss to a profitable or to a better position, like right here. You don't have to. Obviously, if you leave it in because this is kind of like an emotional move again, although it's based on the strategy, because you want to get out if this crosses the trend line. And we can actually set an alert for that. So we can see what happens. So here now, we're now below this one. And then this is like up to debate and how well you've implemented the strategy, whether you stay in or you get out. Otherwise, you would have to readjust it. So you can say this is not a clear break of the trend line. So we would have to wait. And this is probably where you would get out. So when it was here, then this would probably be the place to get out. But if you hadn't moved it, so if you're still on this level, then now it gets a stop loss on that break even, or on this trend line. Right? And this is then where the system halts and the replay breaks.
Okay. Now we know.
Now we know. So we have another case. Great. Awesome. See, but this is how you would test it, and this is how you would test your strategy. And this is like, again, here, I was like, okay, maybe you don't exit here. But if I had exited here, it would have been a profitable trade. So this is, again, that emotion. And if you stay behind your computer, then that's that's the risk that you get. So that's the risk that you take. If you start to get emotional about it, then either you stay in because you're like, no, I'm thinking it's going to go better. It's not. Right?
Yeah. I don't know. I have some issues with my camera, but yeah, it doesn't matter.
Oh yeah, you're a bit blurry.
Yeah, I think the autofocus or something. I'm a shadow. I don't know. I will fix it later. No, I can't.
Strange.
Well.
Okay. Well, I'll just turn you off for a sec.
Yeah.
So you're off.
Okay.
Yeah. So where was I? Cata showing explicit content is what Rapper was saying. Got blurred. YouTube.
Now it's working.
It's working again.
Yeah.
Are you back to normal?
It was the autofocus, so I had to make some moves.
Cata with the smooth moves.
I was thinking, I have a question, because we're talking about like breakouts, and basically we have all the trend lines and so on. There is like a specific time frame that you prefer to work on it, or it's just the same as before that you have to check and see, and based on that you will place your trades?
It depends on how much time you have, really. Like the trade that I showed in Link, this one with the from here, like that took 24 days, right? But it took zero effort after it was found. So the effort is in spotting the markets, and the rest is done automatically. If you shorten that to like a 50-minute time frame, then instead of a 1 hour or 4 hour time frame, you'll probably get lesser profit targets. Still same risk reward ratio, so that's good, but you get lesser profits per position, meaning that you'd have to trade more. So it takes more effort, right? You could profit more maybe, because by trading multiple times several days, you can actually benefit from compounding interest quicker. Like it's always better to get interest or profits like per day than it is per year, right? It's better to get 1% per day than 365% per year. It's the same. It logically it's the same. Or like if you say 1% every day is the same as 365% per year. No, that's not true, because every day you get a % extra, and every day your size already increases. Whereas if you do 365 at the end of the year, then you get, 3 times what you put in, but you can't use that to reinvest, or you can only use that to reinvest after a year. And with the 1% per day, it's actually a lot more. So by trading more with smaller percentages can be more profitable, but it requires more time. So it all just depends on whether you have that time to trade or not.
Okay, fair enough.
But obviously with Altrady, you can trade more with less time. That's just a guarantee, right? Because there is less management involved, less checking involved. You can trade more. If you have a successful strategy on the exchange, then using Altrady will increase your profits. That's like because of because of the way that it works for you, right? You don't miss, like sometimes you miss profit targets because the price moved too quickly, right? And you weren't able. So you maybe, especially if you're a position trader or longer term trader where it's not every day, then you what was I going to say? Completely lost it. Brain fart.
You're on the right track, Ben. Yeah, it's okay.
I had some noise in the office, and then it's like
you just turned 40. It's
I see. I see. Repmar just opened up his bread bucket. He's hungry. It's all good. It's all live.
It's all good. It's all live. I agree.
But
hungry.
All right. Where was I? Any help from the audience? We have a live audience today. Any help? Any help in the chat? Can someone use the replay on YouTube?
No. Jesus.
Oh dear.
Yeah, everything started with a time frame now, but
right. About being able to trade more. On smaller time.
So it's more or less based on what the user wants. I mean, if you have a lot of time, then you can have lower trades in a small time frame. If you don't have time, you can have like one that you set up right now as an example. Another question I have: how I can do this with bots, or do you recommend to use this one with bots?
Well, you can, of course, because of what I showed in the bots part, where you could set up an alert with the trendline, for example. So in this case, I could set up a trendline alert if this price is broken, and we could say trigger point once on bar close. Then as soon as it closes above this trend line, then we could use the webhook with Altrady Signalbot, and we could paste in the payload that you can generate in the Signalbot webhook page. So if you don't know what that looks like, then we have it here, and we can have this one here and the webhook builder. So if you're from the bots, you find the bot, you go to the webhook builder, and this is where you can get the payload. So then you put in your secret, you choose a market, this was a link, I think, like that. You copy over the payload, you go back to the terminal, and we're in that trend line alert setup. We can paste this like that, and then we should see that. So now you can see that this is a webhook alert. Now previously, in one of the previous versions, this had a really nice looking list, but as you can see, that's fixed. So now what this would do is that as soon as the price would break out of this this trend line, then it would instantly create a signal. So this is a way to automate, so even further automate your trading strategy. In this case, it would be the trend line trading, but obviously you can also do that on that position that I found here. where you could set it up with a normal price alert. So you could say like here, and if it closes above it, then you could do this, and you could set that alert again, right? And then it would send the signal automatically to the trading bot. The only difference with that is that it's very difficult to find confirmation, right? So if your strategy is based on finding confirmation in the chart, for example, on a retest, or for example, based on volume, then that's not possible, right? So, but if you have backtested it properly and you say it doesn't matter, as soon as a trend line or a price line has been broken, I can safely enter the trade with the settings that I've configured in my bot. So I have a take profit, I have stop losses added. It's fine. I can take the trade, especially if it's on a higher time frame chart where you do this. Then you would have plenty of time to readjust the take profit levels and readjust the stop loss to the proper levels, and that's like ultimately the better way to trade, where you find the setup manually, you set up your trading alert, you set up your signal alert, and then that sends it to the signal bot, which actually creates that smart position for you automatically. And then when you see that it happened, you can look at it, adjust the trades, adjust the position, and after that it will be continued to be managed using the new settings. And this doesn't necessarily have to be from TradingView or from Altrady. You can also use TradingViews. So if you have breakout strategies or any type of strategy in TradingView, you've got a nice Pine script that you could hook up, then it's a similar thing to do. So instead of selecting webhook with Altrady signal, but that's not included in TradingView, but you can use an external URL, which is also on the webhook builder page, and you can paste in the node similar to what you can here. So you don't need to necessarily use Altrady for finding the signals, but you can use Altrady then for the execution and managing of your positions. So I'm not saying ditch TradingView completely if you don't want to. You can, but you don't have to. There is still very much like Altrady is very much now for enhancing your trading and making your trading smarter and not harder.
Yes.
Isn't that a slogan from our website?
Yeah, exactly. It was perfect. I let you finish because it was like the flow. I mean, it was the perfect thing.
I should go into sales or something. Ditch programming. Where's the sales guy in me?
Oh my God. I think it's great. I mean, we have pretty much, I think we have covered everything on this breakout part. I don't know if anyone has any other question or any question, because I don't know today, beside the fact that Redmar is hungry, and I was trying to show some explicit content. Well, no questions asked for today.
I don't know what you were doing.
The camera was off. Like, yeah, I don't know. We have something in Dutch.
Yeah. George is asking if we want to, in the next session, if we want to go into a little bit deeper into the possibilities of applying webhooks. But actually, you don't have to wait till next week, because that webinar was done 2 weeks ago, 3 weeks ago.
Yeah, we have that done. Let me check that. Maybe I can find it so I can add a link of it in the.
Yeah, if you can add that into the chat,
yeah, exactly. So we can help you even right now. You don't have to expect, because it was DCA strategy, algorithmic trading with webhook alerts. I found it.
There you go. That's the one. That's that's already got everything that you may need. If not, join our Discord, ask questions, and if it's something that we can answer quickly, then we will. If it's something that we could handle into the next session, then we will as well. Like, we're not opposed to reiterating content that we've done before. If people have general questions or good questions that we haven't answered in that session, or require further further confirmation or further explanation, maybe in a different way, then
We have a question, Ben, from Mario. Can I see the liquidation price somewhere on Altrady when trading futures?
Yes, I saw that one.
Okay.
Yes, it will be here under this one. Let's just check. Let's just YOLO into something from Bitcoin, for example. People are gonna be asking me again, how are you trading on Binance futures? I was just one of those lucky guys that got in with Signali when they were still allowing it, and they apparently are not allowing it anymore. So let's see if we can enter. Well, let's not get that great. Let's do the bare minimum. I don't know. I always when I do these test trades, I end up getting a nice profit, and I always like let's do it on a strategy. Okay, so we're in. This is a live trade. Look, we're live trading. Who said that we would be opposed to live trading? Okay. So we have a liquidation price right here. That's for the current position, and there's a liquidation price right here. So you can see it in your open positions as well.
So it's in my positions and also in the positions widget on the right. Okay.
Yeah. And currently Mario owes me 55 cents for answering this question. 59.63 cents.
Or a beertje. Let's make it like that.
Oh yeah, let's do a beertje.
Okay, that's cool. I don't know. Any other questions, guys? Mario, do you have anything for futures or about the breakout?
While we're in a position, let's make the most of it.
I will be curious to see how it happens with this position in our next session.
Yeah, I'm gonna leave it now. I mean, 1%.
Leave it. Yeah, it's fine. I mean, you just bought, I don't know, 5 Bitcoins there.
Nah, $162 for a test trade. I mean, this is not based on any type of entry, but actually, it's not a. This was the sweep.
No.
And this is going back into. I mean, there's nothing here. Yeah, maybe an order block, but
we will see.
This is 50.
Time will tell.
Yeah. No, I mean with Trump, I had a trade earlier. Would it be loaded if I do that? It might be actually, because it is the same account. Oh, that was on. It was on Ethereum. Let's look at my Ethereum trade.
Let's check.
That was a massacre.
Oh my god.
Yeah, there we go.
Well, the entire market was crazy. Yeah?
Well, this was today. Like just when was it?
Oh, okay.
Yeah.
But you sold there, and where you bought?
This was a trade that I took.
You bought there. Okay.
So yeah, it was entering the fair value gap. Here fair value gap entry. This had the OTE, so I don't think it's enabled now. But yeah. Oh no, actually it wasn't like that. It wasn't entering, but it is in the fair value gap. So that's why Roman said to me, this could be a good setup. I was like, okay, if you say so. So in that strategy, this would have been the shift. It closed above it. I got in there, and then the stop loss would be here, and then I got the stop loss here. So actually, right now, what we should be doing for this scenario is to wait for another shift. But this is the low point, so the shift would be here, which is way too high. So if we need to get to here. Preferably, we need to get to here. Actually,
okay.
If we get to here, then there might be a better setup for a long entry, and that's actually not a bad thing because right here we can see there's liquidity. Right, the price broke out from here. Different strategy. Nice little breakout. Right. Nice little breakout from compression. Price shot up, and You know what? You know what always really, really, really surprises me is that this always happens when there's news. For some reason, the newsmakers are looking at the chart and they're like, "It's about to break out. Okay, let's release the news," and then boom, it just
Yeah,
breaks.
it's crazy, especially now with Trump in the end. I mean, it was, and I think we still have a period of ups and downs. Um, yeah, I mean, he just announced that 90 days with the tariffs, they will be like stopped for now. And I think all those, I think that was the notice that actually affected the markets, and it's still a lot of unknown for the major players in the market. And yeah, we will see. I don't know. What do you think that will gonna happen, Ben?
It's unclear. I can't predict Trump. I mean,
Nobody can, but yeah, I mean, I think there are two scenarios in the end. You know, one that's gonna the market gonna stabilize, and the big players that are gonna start to trust, you know, and what happens and to have stability, or another one that will gonna still continue as it has done before, and we're gonna have these big spikes. That's the way I see it.
yeah, I saw my normal stocks portfolio go up and down like crazy. Like I thought I was holding Bitcoin in my in my regular accounts. I was like, this volatility is not something I'm comfortable with my pension money.
Yeah, I was talking actually with my wife on Friday about this because we were like, I was thinking, you know, might be good option to actually check stocks now. And I was like, okay, let's expect a bit more, but yeah, I will take that in consideration. I mean, I mean, depends of the time frame that you want to expect and you know, expose yourself. I do think it's a good time even now. I mean, for some.
Oh yeah,
stocks.
no. I've don't get me wrong. I've recently started to increase my stocks and shares portfolio again.
Yeah,
Like
I think
the same thing applies, right? Don't YOLO into the market straight away because when I did that, I actually like from that I lost money. But if I would get in now, I'm actually buying in at a very decent level, and it's the same with crypto. Like, if you think, oh, I have some money laying around, and I'm like I have this amount of money. Let's say I have 20,000 to invest. Not many people have 20,000 to invest, but if you do, then don't go to the bank and say, "Here's my 20,000. Good luck with it," because then, yeah, if a crash like this happens, you would have lost, I don't know, 15-20% right off the get go.
Yeah.
So then it would be way better to say, okay, I'm going to invest it in the next 4 months. So then you put in 5,000 every month, right? If you win the lottery or if you inherit some money, then that is a better way to do it than to just put it in straight away, generally speaking, because a lot can happen in 6 months. Obviously, in hindsight, you could say, oh, well, if I had done it from the first part, then if I had just got in, and then it would have been only in profit because the price went up and kept going up and going up and going up and going up. Yeah, in hindsight, true. But if it was the other way around, then you would not have been happy. And actually, if you do it with dollar cost averaging, you're going to be happy no matter what, because you should be in profit no matter what the price or the movement of the price that it made, if it's basically going back to the same entry level as where you were before.
Yeah.
Right. On that note, it's now 5:10 for me.
I think we can wrap this up. I mean, I don't see any other question.
All right. Well, that was another nice
good
session. Again, if you have any questions, leave comments, join our Discord, and see us again next week, because we will be here next week, Tuesday. Another backtesting session with me and Roman. So we're going to be doing like what I showed today. I'm going to be doing that again, but then only based on the smart money concept strategy. Hopefully to avoid these types of drama things. This is just testing money, but you know.
Yeah. And for the next Thursday, we're gonna talk about moving averages and how we can use them. Go a bit more in depth.
Moving averages sounds interesting. I'm there.
Yeah. Okay. Awesome. Have a great day, everyone. Thanks for joining. See you soon. Ciao.
Thank you, guys. Bye bye.